Today, we're looking at the profits that hedge funds made last year. And joining us now is Bloomberg's Hema Parmar, because the interesting thing to me, Hema, about this list, Bridgewater used to lead it for a while in terms of net gains since inception. And now you not only have one firm ahead of it, you have three. Tell us about them.
Right, so we're looking at some of the biggest names in the industry here, really topping this list of profits that these funds have made. Bridgewater lower down. If you look at Bridgewater, they're interesting because they've struggled for the past 10 years or so. They've had a difficult go. So when you look at their net gains since inception, you want to keep in mind that a lot of that probably came earlier in their career.
What about the idea here? You had Citadel for the first time jump above Bridgewater in terms of net gain since inception, and now you also have Millennium, D. Shaw. Is this a vindication of the multi-strat model, or are they one-offs?
Well, I think part of it is the bigger the firms are, the better they do, and a little bit of a gain on a lot of assets is going to create a bigger dollar term profit. And so you're seeing a size situation here, and a lot of those big firms are these big multi-strats. If you take a look at the data, the group of 20 that we look at on this list, they generated about a third of all the hedge fund returns last year. And if you look at since inception, it's 80% of all absolute returns coming from just a small group of 20 funds, and the biggest ones.
What are some of the names that just stood out last year? Were there some interesting ones that jumped ahead of the pack?
Well, I think what's interesting when we look at this is the kinds of things that kind of help some of these funds return and the changes that we've seen. So leverage being a really big factor here is something that has helped firms amp up and boost their returns. And so when they have more money to invest and those do well, you can see better gains and you can see helpful profits. Also keep in mind, a lot of these firms have high fees, so the firms themselves benefit from those high fees, but these net gains are taking fees into account.
What can you tell us about TCI? I mean, that was the one that really jumped out to me, given the gains were so striking relative to everyone else.
Yeah, so TCI, they've been a very strong firm for a long time. They're an equity stock picker. They went $50 billion, so sizable. And he made $13 billion in gains last year alone. If you look since inception, more than $40 billion. So steady returns. His fund was up about 33% last year. So you're seeing good returns, sizable assets, and then the ability to produce profits on the back of that.
Really quickly here, Hema, a lot of people talk about Bill Ackman for other reasons these days, but Pershing Square actually jumped back to a significant place on the list. Is it really just about stock picking in this environment and the traditional stock pickers and even activists like Bill?
I mean, I think it's a few different things. Part of it is the strategy, part of it is how successful you are, and part of it is if you have enough assets to really make it matter. And so that's why you see these big names. And yes, you see Bill Ackman's firm up here. He made $3.5 billion in gains, a lot less than TCI, which came in at nearly 13. So it's all relative, but still.